Welcome back to our video series on the US tax reform. Today we want to focus on the taxation of pass-through entities. Elisa, over the course of the other videos we have heard a lot about the reduction of the corporate tax rate, which has a huge impact. But what happens actually if I invest in the US through a pass-through entity?
Well, that's a great question. And as you know, we have a lot of our German Mittelstand companies that invest through partnership structures in the U.S. And so that's primarily due to the tax benefits in Germany, often to have a partnership structure in the U.S. But now we have potentially a new opportunity for partnerships here in the U.S., the QBI, or the Qualified Business Income Deduction.
So Elisa, what exactly is the Qualified Business Income Deduction?
Well, you may have heard this referred to as the pass-through deduction, and it's not really a pass-through deduction at all. When I think of a pass-through deduction, I think of a partnership deducting an expense, and that is not what this is. So Congress enacted this QBI, as we like to call it, to try and get corporations and partnerships on parity with each other, since they were giving such, a benefit to our corporations by going to the 21% rate. And so essentially, an individual can get a deduction of up to 20% of their qualified business income, which is basically the operating income of a qualified business. So the deduction is, of course, determined by a pretty complicated formula and is subject to a lot of limitations, like lots of things in our tax law. But I think this is going to be a good opportunity for some of our German investors.
Okay. Can you maybe just tell us some of those limitations?
Sure. So there are actually three main limitations. The first limitation is with respect to taxable income. So the deduction can't exceed your taxable income. And for individuals below a certain income level, this is the only limitation that they need to worry about. For individuals above the certain income level, then there's a second limitation with respect to the actual business that the partnership, for example, or the pass-through is in. So certain service businesses like accounting, law, actuarial services, those kinds of things, those do not qualify for the deduction if you are above a certain threshold.
So you are saying we are actually out?
I'm afraid that we are, unless we're under the income threshold, which we might be. Maybe we're not being paid enough.
Right. Say this again.
Okay. Yes, so unless we're under the wage limit, then yes, we would be out as well. But the last limitation relates to the wages and the assets of the business itself. So the deduction cannot be more than one of two things. Either 50% of just the wages of the business, or the second alternative is it cannot be more than 25% of the wages plus 2.5% of the investment in property in the U.S. And they added this second component, I think, later in the law because they wanted to help this be applicable to real estate investments and not just, other types of property investments.
How are taxpayers going to get all this information?
Well, I think our partnerships are going to have a lot more work to do, which might also mean more work for you and me.
That's good.
So the partnerships are actually going to have to supply all of this information, to their partners. So they're going to have to tell them, what the 50% of wages are, what their share of the allocable property is. All of these things are going to have to be provided by, the partnership when they issue their K-1s to their actual investors.
Mm-hmm. So then, in the end, do the owners of German Mittelstand companies really benefit from the QBI?
Well, that's a good question, and my immediate reaction to that is probably not. So we actually have to have, a partnership here in the U.S., and as we've talked about before, and a lot of our German Mittelstand clients are owned through a KG that's treated as a corporation. And corporations don't qualify for the deduction, unfortunately. But I do see a few opportunities still for German investors. One would be an investor in the real estate funds, for example, in the U.S., and we have quite a bit of those that invest in the real estate market here in the U.S. They would qualify for the deduction. And I think second, we also see a number of our clients where a German executive is coming over to run the U.S. business, and sometimes they might offer him a share of the partnership interest as compensation, for example, maybe, or an incentive to come into the U.S., and that individual executive would also, likely qualify for the deduction. So for those people, I think there is some opportunity.
Okay, very interesting. Yeah, Lisa, thank you very much for your explanations, and thank you very much for watching us today. And there are more videos out there on the US tax reform, and please watch them if you are interested. Thank you.